Hi everyone, I'm Shannon Terrell, a staff writer here at Finder, and I'm here with Ryan Brinks, who is one of our resident experts on investments. Ryan, thanks for taking the time to chat.
Thanks, Shannon. I'm glad to be here and share a little bit about what I know.
So, I've been hearing a lot about oil futures in the news, and there seems to be a lot of talk about these futures being in the negatives. I'm curious to know more about what that means. So, are they really paying people to take oil? And if so, does that mean that there aren't any risks?
So it's all very interesting and historic. One type of crude oil, the main American variety, called West Texas Intermediate crude oil, it plummeted from about $50 a barrel back in January 2020 to $20 in March and even lower here in April due to coronavirus lockdowns across the world. Basically, a lot of people were suddenly using a lot less oil. Some West Texas Intermediate futures contracts even went negative to minus $40 a barrel, meaning the sellers of those contracts would pay people to take it off their hands.
Oh, okay, wow. So if that's the case, why isn't everybody jumping on that and getting paid to take oil?
Well, the way futures contracts work is that you're buying the physical oil. So you could get paid to take it, but you'd have to have a truck to pick it up from the pipeline or a storage facility in Oklahoma. Or you'd have to hire a truck to get it for you, and you'd have to have some place to store it at home. Now, the places in the US to store that oil are quickly filling up. So the only options for those who own those futures contracts are one, sell them to somebody else, or two, roll their contracts over to a future date, a future month, and take them then. If everyone's up to their eyeballs in oil, prices for those future months may continue to drop until we find an equilibrium. If you have a way to get that oil delivered and stored, and you don't mind using it or letting it sit there for months or longer, then go for it. But otherwise, oil futures may not be for you.
Okay, wow. Okay, so if I am new to investing and I do want to invest in oil, what are my options? The first place that my mind goes is to stocks. Can I buy crude oil stocks?
Absolutely. Stocks are going to be far easier for the typical investor. It's pretty simple to open a brokerage account if you don't already have one. And buying a stock can be as simple as typing in the ticker symbol and deciding how much money you want to invest in it. The challenge is going to be deciding which company to invest in and when. Even if you're not stuck with barrels of physical oil, investing in stocks can still be risky. Start by learning what your options are and how the oil industry works. Then research individual stocks from there. Oil wells aren't cheap or easy to turn on and off, so the industry is notorious for having long and extreme cycles. Bull and bear markets that last an entire decade or two. 2020 is definitely a historic low. Crude oil hasn't been lower any time on the 70-year charts you can look up on the internet. But remember, this downtrend may not turn around very quickly either. If you're going to look at oil stocks, there are the drillers, there are companies that make the drilling equipment, they're the companies that move the oil by pipeline, by boat, by truck, they're companies that store it, they're companies that refine it into gas and other products, they're the companies that sell those oil-based products, and they're the companies that look for new places to drill oil. Now, with the world up to its eyeballs in oil, you can guess how differently the stocks of companies that, say, transport and store oil will be compared to the companies that drill or explore for oil.
Right. Okay. That's good to know. So besides stocks, then, are there other ways that I can invest in oil?
Yes, and there are two main alternatives. The first is a special type of oil company called a Master Limited Partnership, or MLP. These stocks are taxed differently and are often attractive to certain investors because they produce a steady stream of income by paying dividends. A lot of MLPs own the oil pipelines. The second alternative is exchange traded funds, or ETFs, which are funds that hold a number of equities under just one ticker symbol. They're kind of like mutual funds, but can be traded all day long just like stocks, and they have some other small differences too. Oil ETFs generally either track the price of oil itself by holding futures contracts, or they track the industry by holding different oil company stocks.
Okay. Okay. So I know that diversifying your portfolio is something that's talked about frequently in the investing world. So from what it sounds like, because these ETFs are more diverse, do they have less risk?
Because ETFs are inherently diversified, they're not as volatile as the individual stocks. But the oil industry in general is still volatile, and that affects the risk of investing. The price of oil in the US is affected by the price of oil in Europe or the Middle East. And we've seen how conflicts in the Middle East can quickly change the price of oil. At the company level, some of the biggest oil companies like BP, Chevron, Shell, they have diversified business models. They do everything from the drilling of the oil to selling the gas. So they're likely to be less volatile as well. The riskiness of the ETF depends on the companies it tracks. And an ETF that holds the major oil producers, like I mentioned, is going to be less risky than one of those major companies itself. And that ETF is also less risky than an ETF that holds the smaller oil stocks, even though both ETFs are diversified. On top of those differences in the companies and the ETFs, risk also varies significantly based on the person who's investing. An experienced oil investor is taking less risk than a new investor because he or she understands what's happening and the implications those things have for their money.
Definitely. Well, I think we're about ready to wrap up for today, but thank you so much for taking the time to chat, Ryan. I learned a lot. It was super, super helpful and informative. Thank you.
Yeah, thank you for inviting me, and good luck investing.